This is Behind Closed Deals.
We'll be chatting with multifamily maestros
Uncovering their strategies
and unraveling the latest market happenings.
Bringing you intel you can't buy. Well, hello, everybody. This is Hannah Ott with CBRE. I co-lead the Indianapolis-based team here at CBRE. And today I am joined by Nick Polera, who is the VP of Acquisitions and Capital Markets at one of the nation's largest private owners, Morgan Properties. So welcome to the show, Nick.
Hey, good morning, Hannah. Thanks for having me.
Yeah, very excited. We have a very exciting transaction to talk about that we just completed with Morgan Properties, but excited for you guys to get to know Nick a little bit better and Morgan and hear about a large transaction that we just completed with them. So, Nick, what's harder, raising equity or assembling furniture from IKEA?
That's a great question, Hannah. I would say, look, we're very fortunate at Morgan. We've got a great group of dedicated and loyal partners that we've worked with for a number of years. Our track record helps a lot with that too. So I'm never going to say it's easy to raise equity, but certainly having that track record and working at Morgan Properties makes my job easier from that perspective. Assembling the furniture from IKEA, though, that is, I think, the bane of all of our existence. I certainly do not look forward to it. So I'll go with assembling the furniture from IKEA.
I like it. I like it. Are you a morning person or a night
Before COVID, it was certainly don't talk to me until I've had my coffee. But now, I've got 3 young kids, and early mornings are just a natural part of my routine. I'm certainly, these days I'm an early to bed, early to rise train, which, if you asked me 5, 6 years ago if that was going to be the case, certainly would not have told you that. But here we are. 5 a.m. mornings are a part of the routine.
I love it. All right, so you're a morning person that can raise equity, but you don't want to put furniture together. I got it. But I think that people are probably more interested in how did you first get into real estate?
Oh, I like that. I started out actually on the hospitality side of real estate, and it's very funny. We had a saying, and we would always show our hand, right? And it was, hotels with the thumb, right? You had retail, you had office, you had multifamily, you had industrial, all things that are kind of similar, a little bit easier to underwrite, and then you had the thumb, which was the hotels that are just not like the other. I Starwood Capital was my first job right out of school. Worked on the hotel team there. We were super, super active at the time, which was great, and learned a lot about the business. And then after that, I navigated to another firm in New York, which was a bunch of ex-Starwood guys called MCR. We were heavily focused on, transactions, being we just raised our first fund. So that was my intro, certainly into the deal side of the business, and, had some great experience, really taught me, how a deal works cradle to grave. And I think that's probably something, folks don't know, is that before joining Morgan, I had never underwritten a multifamily property.
Now, how many have you done? Oh my word. How many of you I mean, thousands, I'm sure.
Tons and tons, yes, tons and tons. 14,000 units last year alone. But yeah, when I joined the firm, oddly enough, I had never underwritten multifamily asset, but I've got great leadership here, in the Morgans, and Renus Petrolis, our CIO, who fortunately gave me enough leash, kind of let me prove myself. And oddly enough, the very first deal I worked on when I joined was a 46 asset, 14,000 unit portfolio across 11 states. So I got my reps in very quickly, and the rest is kind of history.
I love it. Well, what drew you to Morgan?
It was kind of the entrepreneurial spirit that we've got, and Mitch founded the company in 1985. We still own those 3 assets. But
Do you really? You still own those first three assets that he bought in 1985?
yes, up until 2 years ago, our office and headquarters was still at Kingswood Apartments in King of Prussia, which was the very first asset Mitch had bought. So we kept it, we kept it very close to home.
What was your first role in Morgan?
My first role, I came in on the deal team and worked for Remus, our CIO. I was an associate at that time, so I'd had some transaction experience. But our team was much smaller, less than kind of half the size it is today. We've done a great job of kind of building that out because we've continue to grow the platform, not only kind of on the equity side, but on the credit side too. And we're going to continue to do that as well. So we'll certainly touch on that at kind of later as we go on. But like I was saying, that entrepreneurial spirit that we've got here at Morgan is has been great. I get to see the entire life cycle of the investment. That's really important to me. A lot of shops kind of buy the deal and ship it off to the asset management team. Certainly not how we function. We've got a great asset management team in place, but our team handles also all of the refinancings. We handle all the dispositions. So the ability to see those investments come full circle and see those business plans come to fruition is definitely one of my favorite parts about Morgan.
So cradle to grave.
Cradle to grave.
All the way. All the way. Well, I love Morgan's story, and a lot of people probably know that Mitch started the company in the '80s. I didn't know that they still own those first couple of deals, so that's exciting. Tell us how big Morgan is. I know you guys acquired 14,000 units last year alone, which is a massive, massive undertaking. What's the size right now, and what's the focus on growth or just holding steady?
Yeah, so we've got over 430 properties today in the portfolio on the equity side, and that's a little over 110,000 units. So we're certainly up there. I think there's probably a battle in 26 for, us being second largest or first largest, but we'll see how that shakes out. But we're certainly still in growth mode. We're certainly still open for business. I'd say 2026 is already off to a hot start. We've got Canterbury plus some others that'll be closed in the next week or so here, and that'll be north of 2,500 units. So I can't promise we'll replicate 2025, but we're certainly going to do our best to keep the momentum moving in the right direction, which is growth for the firm.
Well, that takes us to the last transaction that we did with you guys. So our team has been fortunate. We've closed 8 properties with you, and always enjoy working with you and your team. You guys are truly experts. I'm always amazed at from the time period that you get the property under contract through closing, you are a well-oiled machine. It's truly it's fun to watch. It's enjoyable to be a part of. You guys actually do some of our jobs. We get a little sad that we do, the prorations and a lot of the due diligence coordination, pre-closing call and that. And you guys are just as detailed. And we've actually taken some of your pre-closing call things that were on your agenda and added them to ours. So appreciate getting to learn from you guys. But we had the pleasure of selling you 2,000 units that closed just this last month in Fort Wayne. It's obviously the largest property in Fort Wayne, but it's the largest property in the state of Indiana. It's one of the largest in the Midwest, and I'm sure it's one of the largest in the nation. And so when we brought it to market, I will be honest, I thought specifically of you guys. I thought this has got to be a great deal for Morgan, but what attracted you guys to the Fort Wayne market in general? Because this is not your first acquisition there.
No, it is not. And I remember that call actually, Anna, where you reached out and you're like, "Have I, do I have a deal for you?" And certainly agree. It was a great fit for us. And like you mentioned, what attracted us to the deal, at the get go was one. When you have a portfolio that spans 22 states, right? Oftentimes we are in the market. We do already own 2 other assets in the Fort Wayne market. So, we were up to speed on what's been going on in Fort Wayne. And, the market, I think, has a lot going for it that maybe people don't see. And that's been part of kind of our strategy too, right? It's a well-diversified economy. It continues to see, steady population growth. I'd say a lot of similar trends to what we saw when we entered the Indianapolis market with you, 5, 6 years ago. So from our perspective, it definitely made sense as a large, little more complex deal, but also in a friendly market that we knew well.
I love that. I don't think I told you this story, but I was telling someone else the story just actually this morning because they said, "Hey, I heard that your team just closed a big deal," and I was telling them about Canterbury. When I was in high school, I have a very vivid memory of going to Canterbury to visit one of my best friends, and we're so close today. Her brother lived there with his wife, and this was in the '90s. So the golf course that goes through the community, and they lived in one of the units that overlooked that. I remember truly, I have a very vivid memory thinking, "This is like the coolest place ever." Now, I'm from a small town just north of Fort Wayne, but I was enamored by Canterbury Green. So it really was for me personally, an exciting deal to sell, and it was awesome to do it specifically with you guys, and would love to hear about how Canterbury fits into your broader portfolio and what your plans are for the asset.
100%. I mean, I would say it's a spitting image, of the product that we did buy last year that we're going to continue to buy this year, right? And it's value add product that has a strong story. In this case, the seller had done a good job at proving out some of those premiums. Our plan is going to be to go in and continue to build on that. We thought with an asset this size, right, it's just a ton to manage. So to be completely honest, a lot of the business plan is going to be focusing on some of the more ancillary kind of, items on the revenue side. We're certainly, going to focus on the expense side too. And what helps us is that when we continue to add, more units in the same market, like we've done in Indianapolis, for example, like we've done in Columbus recently, lets us move to a more regionalized strategy in terms of operations. So, certainly Canterbury is going to be home base for Fort Wayne, but given that we've got over 3,000 assets in the market now, we can start to think about that as more of a larger pod. Helps us, realize some operational efficiencies, on say the staffing side, certainly on the procurement side when we're going out and wanting to renovate these units and being able to buy and scale and get some discounts there. But overall, we've continued to see the Midwest as a great market for investment. We've been huge proponents, much more muted supply compared to the Sun Belt, right? I think everyone is still continuing to focus on when does the Sun Belt bounce back, and we certainly think that it will at one point. But along the way, the Midwest has been steady Eddie, and we've continued to see really strong rent growth. And Fort Wayne has had the same kind of impact. So this deal allowed us to check a lot of boxes, to get in at what we thought was a very, very attractive basis when you talk about replacement cost, which is important to all of us. And then, even our kind of stabilized metrics where we thought we can kind of bring rents and where we kind of think at the end of the day, after we renovate these units and provide a better product to the tenants, where we're going to shake out, for our investors. It's one of those opportunities I mentioned earlier where I'm going to be really excited to watch it come full circle and kind of come to fruition in a few years.
I love that. That's great. You guys have, I know, a lot of experience with large properties. Is this it's so Canterbury is 2,000 units. Is this the largest individual property you've ever purchased?
This is the largest individual property, yes, which I think it was a culmination and builds off of, the almost 1,400 unit property that we purchased with you a few years ago, Boardwalk at
Yep.
was. But inside the portfolio, I mean, we've got quite a few, what I would call bigger assets, right? We've got 5 assets that are over 1,000 units in the portfolio. We've got 29 assets that are over 500 units. So, it's certainly becoming, a specialty to handle these bigger assets. We definitely kind of staff them a little bit differently. We think again, how you said, if there's efficiencies in certain aspects, do we have positions at these big assets that wouldn't necessarily have at small assets? 100%. So, I think Boardwalk was a great opportunity for us and certainly down the road in Indianapolis, and allowed us to have a lot of confidence going into Canterbury that we can, use a lot of those same strategies here.
Yeah. It's funny to think that, oh gosh, 10 years ago, because you bought the Fort Wayne properties, I want to say about 7 years ago, your
Yes.
previous one.
Yeah.
So 8 years ago, you didn't own anything in Indiana, and today you own the largest property, the second largest property. I'd love to sell you the third largest property. And this feels like a really good time to remind you that we do have a 700 unit portfolio in the market in Fort Wayne that you can purchase. You can continue to build your empire in Fort Wayne.
Well, we're certainly taking a look. I would say our current pipeline, we've gotten north of 10,000 units on there that we're actively underwriting. And like I said, we've got, fortunately, a lot of really dedicated and stable long-term partners that want to continue to grow with us. So that's what we're going to focus on. And I'd say the Midwest is going to continue to be, the focus. We have seen a lot of expansion. Obviously, you did a deal with us, it's almost 2 years ago now, but in Dayton, Ohio. And so, and not just Indiana, but in all the regions you cover, we're starting to definitely see more scale and more growth opportunities.
That's great. Well, you talked about partners. Let's pivot and talk a little bit about your equity structure and the partnership that you have on Canterbury and sort of broader. How does Morgan view equity relationships? I know that they are, you guys have the ability to buy deals without partnership, which makes you a really durable and nimble buyer. But talk to us about your partnership sort of structure on Canterbury.
Yeah, absolutely. I'd say one of the interesting things about Morgan is that we don't actually have a fund, right? So oftentimes people ask, buying that many units, right? You must have a fund vehicle, right? So you can kind of move nimbly, like you just said, and do that. But believe it or not, we don't. Every single asset that we own on the joint venture side is in a separately managed account with different partners. So Canterbury, for example, is with a partner that we've had a long time relationship with. We own north of 35,000 units with this one partner. The good news is they already owned in Fort Wayne with us. So again, allowed them to kind of get up to speed quickly on the deal. But we teamed up with them and our typical kind of joint venture structure. So it's great that they're excited about the market too. And we love that the asset that we've already got on the northwest side of town has continued to perform really well. And we're going to try to replicate that here for sure.
I had the opportunity to spend some time with your equity partners as they were in Fort Wayne, and you could tell that there was a lot of trust in the relationship and that they also were really asking their own questions, getting to know the market. They had a good mixture of a lot of trust of the relationship that you have, but they were doing their own due diligence. We we together provided information to them for the last 20 years in Fort Wayne, which it was a great exercise really for our team because as we looked at what has happened in Fort Wayne over the last 20 years, in that time period, you have COVID, you have the '08, '09 time period. You've got a lot of dynamics going on in those last 20 years, and Fort Wayne was incredibly durable. Average occupancy, for the last 10 years has been over 95%, but in that 20-year time period, during all of the time period during that whole time, it was over 90%. And so I, appreciated that they asked those good questions and really wanted to make sure that they're comfortable being a large owner in that market and enjoyed interacting with them.
100%.
They're with
We want to invest off of good data, and fortunately, you guys were really able to help us there. And it is. I mean, we've been looking at that across a lot of markets, as of late, and we're kind of getting to certainly that point in the cycle where people are talking about the resiliency, and we talk about, like we mentioned earlier, the potential bounce back in the Sun Belt and other areas of the country that didn't get a lot of the tailwinds that the Midwest saw over the last couple of years. So we love that data. We're very happy that you could provide it to us. And certainly, like you mentioned, yeah, we want our partners to be involved, right? And they have been, which is great. And it acts as a good soundboard for us too as we're going through the deal, right? Certainly, we're totally open on whether we want to make tweaks to the business plan together. Again, like we mentioned, with 35,000 plus units together, we've got a very long track record. So was happy you could meet them, and certainly excited to do some more deals with them, and hopefully some more deals with you in the Midwest with them.
Yeah, that's right. Well, you had a great equity partner and, structure there, and then you guys had a great debt partner. Maxie Leachman with the CBRE debt platform did an excellent job for you guys and closed you early so that you could have a, restful NMHC, which was great. So talk to us a little bit about your debt structure.
Yeah, it was great. No, definitely, like you mentioned, shout out to Maxie Leachman and the Mid Atlantic Capital Markets team. We've worked with them a lot over the years, and this was a great. We came off the back of actually closing a deal with them in July of last year, another Midwest property in Cincinnati, and then prior to that, it was a large transaction also in the Midwest, but was the assumption of two Fannie facilities. So another super complex one, but that's where Maxie's been super helpful is on these more complex deals. I mean, this was a ginormous single asset loan, right? North of $150 million. And we are fortunate to partner with Freddie Mac here, who we've done, tons and tons of business with over the years. And this one a little bit different than some of our other deals. We actually We're looking for max flexibility here. We've got a good business plan. Obviously, you know, nobody's positive where rates are going to go, and that volatility is certainly still present. Right, we've been watching it bounce around here for the better part of 2 years now. But we did a floating rate loan here. Typically we do fixed rate loans, and we wanted to do the floating rate loan here to just allow us max flexibility, so that if there is a point in time, and we don't need that point in time to happen to make the deal successful, but we'd love to be able to have that flexibility on a deal this size. So we went with a Freddie Mac floating rate loan, which is a little bit atypical.
Okay. Yeah, we are seeing a lot of people close with, something fixed, especially if they go through the agencies. But I like that you have the flexibility here, especially given the size of the property. George Tickajohn has always wanted to see the land by the river that goes through Canterbury be developed for housing or BTR or something. So I suppose that gives you some flexibility there if you wanted to make any of those decisions or pivots.
Yeah, no, we've got a lot of big plans, for the asset, and certainly, that was one of the items that even you guys had highlighted too, right? Is that the campus is sprawling, right? And there's certainly opportunity to maybe partner with some local neighbors. We've got the Purdue University campus just to the south of us. They've been great partners so far. We're going to continue to kind of work with them going forward. And outside of that, like you mentioned, if Fort Wayne continues to grow, they'll certainly need some more housing, and that could be an opportunity as well.
I love it. Well, again, it was such a pleasure for our team to work with you and the whole Morgan team. And we'll close with something light. If Morgan gave you a 1 month sabbatical, where would you go and what would you do? I know you've been working very hard.
I would say, 1 month sabbatical. That's good. I would do a lot of prep before next to leave the keep well hanging and dry. But I think I would love to go to Italy. My wife and I have not been back since our honeymoon, which was 10 plus years ago. So we would love to go to Sicily. I think we've talked about it for a long time. We're going to get close. We're headed to Malta, actually,
Oh, no.
about a month or so for a friend's wedding. But we're big fans of the Mediterranean and the warmer weather. We have had a brutal winter here in Philadelphia, as you guys have had too, out in the Midwest. So anything sunny and warm sounds like a great idea for a 1 month sabbatical.
Well, let's get Morgan to be the largest donor in the nation, and then that's the payoff. 1 month sabbatical to Italy. Pull out, pull that out there right now. I love it. Well, thank you so much for joining our podcast, for telling the story about you and Morgan and Canterbury. It's really a momentous transaction for the city, for us. It feels like for me personally, and so it was really a pleasure to work with you. And we look forward to doing it again because, as George says, you're only as good as your next deal. Thanks for joining, Nick.
Thanks, Anna. Appreciate it.
Thanks for tuning in. Stay in the loop by hitting that subscribe button and check the show notes for additional resources.